Welcome back, everyone, to another episode of the Agents to Owners podcast. With me today, all the way from Caldwell, Idaho, VP of Sales of the Hartwell Corporation, strong advocate for the employee stock ownership plan, Mr. Brian Baughman. Brian, welcome to the show.
Thanks for having me, Brad.
Super excited to chop it up with you today. We met at the last IAOA convention and it just had a really interesting discussion about the ESOP plan. And I saw right away that you were passionate about it, and following you on LinkedIn, which, by the way, everyone out there, he is a good follow on LinkedIn. But yeah, definitely passionate about the ESOP program, which I think is something a lot of people in our industry are really interested in and just don't know where to get going on it. So he's going to shed some light on it, on that topic for us. But before we get any further, Brian, why don't you tell us a little bit about yourself, how you found your way into the insurance space?
Sure thing, Brad. Well, first off, let me just warn anyone who may follow me on LinkedIn that in a world of people trying to really show value on LinkedIn, I'm going against the grain and providing no value at all. So that's my strategy, is providing memes and just
Yeah.
thought-provoking things. And there's enough folks providing wonderful things that I thought I'll just be humorous. So
Yeah, and you are. Yeah.
regarding insurance, I think that I can say I was both born into the industry and I fell into the industry. So most people are one or the other.
Yeah.
I was mowing the lawn at the agency my dad worked for when I was in junior high. But out of college, I was selling copy machines door to door in Southern California. And I knocked on the door of an insurance agency, and the profit center leader of that agency said, "We're looking for salespeople."
Mm.
And it hit me that she was kind of insinuating that I could be one of those salespeople. And I called my dad, who was an insurance agent, and said, "This gal from Brown and Brown just offered me a job. And have you ever heard of this insurance agency before?" And he said, "Yes, I have. And you need to take this job." So I was in California for 4 years after college and then moved back to Idaho in 2010.
Okay. Okay. So from there, take us up to when you got going with Hartwell.
Yeah. So from day one, did only commercial. So my personal lines game is actually probably weaker than a lot of the independent agents you'll talk to, because I never had that foundation, but have done commercial production. And a couple of years ago, started working more on our sales management side of things, going on meetings with other producers. And then recently was moved from kind of a assistant sales manager to VP of sales, where I still have a book, but I get to go on new business meetings with our salespeople, recruit producers, and then do follow-up meetings throughout the year, kind of assessing where we are as a team.
Oh, nice, nice. So talk a little bit about Hartwell. It's a pretty big group, correct? I mean,
Yeah, so we have roughly 90 employees, been around for a long time. Our founder and kind of agency patriarch, Ralph Hartwell, passed away probably a decade ago, but he was a local philanthropist. Wow, that was a mouthful. And he really believed in the industry, believed in the local area, developed a great name. In 1999, he sold 30% of the company back to the employees through
okay.
the employee stock ownership plan vehicle. And then in 2007, we became 100% employee owned. We've always been, as an agency, about 90% commercial. And now we're in the process of growing our personal lines and medical benefits, and recently discovered Medicare, and have added Medicare to our benefits team.
Okay. So your role, as you mentioned, VP of sales is more working with your sales force and doing a little bit of production on your own. Do you have uh, specific markets that you'd like to target, or is it just kind of a generalist, or what does that look like?
Yeah, so we are generalist as an agency, but we have some niches within our agency. So we essentially dominate the architects and engineer space. I
Okay.
don't work with those those companies at all. But we have an agent who does. We have a few exclusive markets. I work with construction companies, municipalities, nonprofits, and then a smattering of other things that just come along. So
Yeah.
Idaho's a growing area. We're in the Boise area, which is exploding in growth. So there's no shortage of business and people moving to the area from out of state.
How are your producers finding their leads?
So it's usually a combination of things. We're moving toward a more structured, recording all outbound calls on a CRM model. But in the past, I think there was a lot of door to door new business approach, networking, getting referrals. But I think most producers, and specifically newer producers, need to pick up the phone and just ask folks if they'd be willing to talk to them at their next renewal or
Yeah.
even midterm.
Yeah. Cold calling. Yeah. Which is, I mean, that's how a lot of the commercial side of the house is done, right? So, so yeah. Now you touched on the beginning of the ESOP. So your agency is founded in 1963 and 1999. Is that kind of the where the ESOP program was born?
Yeah, so in the 90s, our founder, Ralph Hartwell, knew that he needed to make a change and needed to consider what his perpetuations options were. In fact, at one point in time, he had a contract from a large broker that whose name you would recognize that sat on his desk for a few weeks, and he considered signing it. But I think what shifted his mindset was knowing that if he went with this other agency, the name of the agency would change, the people would change, the culture would change.
Mm.
And so he really evaluated
Mm.
strongly the ESOP and decided to go that route. Um, in hindsight, his decision was a life-changing decision for me
Wow.
because I came and joined an agency that was already um, giving out shares of stock annually based on compensation. And so the groundwork was laid for all of our employees to benefit from that.
Yeah. So what did that look like to create the ESOP from scratch, basically?
Yeah, I mean, I'm convinced that any business owner, insurance or otherwise, who wants to give back to their employees while still being paid for the hard work they've done to create a business should consider an ESOP, and the ESOP is the best way to go.
Yeah.
I don't think there will be seller's remorse, and the employees for generations will be grateful to that owner. So, take for instance your agency, Brad.
Yeah.
The first step would be to sit down with your accountant and say, "Hey, I'm considering this. What are your thoughts? What are your suggestions?" We find that accountants are oftentimes telling business owners that we insure, "Hey, have you considered an ESOP?" And they'll say, "Hey, I think my insurance agent is an ESOP." And so, what a business owner will do is go get a private valuation done
Mhm.
of the company. But at the same time, you'll also need to get a trustee, assign trustees that will help with the process. So, what's different creating an ESOP versus just selling to another group is that you lose a little bit of control over how much you sell your agency for. On the flip side, you also get incredible tax benefits that will help your agency long term and help the employees long term.
Yeah. Yeah, let's start there. And we'll use myself as an example. So I in 2022, I did have a valuation done of my agency. And so what would that look like for my employees then? And do we just use that valuation, or do we is there any adjustment to that? How would let's say I have 8 employees, and we use this valuation. How do they start, and is everyone automatically included in this plan?
So, a couple things that I typically ask a business owner is this: would you be able to set aside, say, $50 to $100,000 to pay for a separate valuation through a government-sponsored organization?
Mm.
Because, like all things, if the government starts giving you tax incentives, they want to have a lot of say in how things go, and they want to make sure that the owner isn't cooking the books and trying to use an ESOP for nefarious means. Not that you would do that,
Right.
but a private valuation would be done. It would be separate from what you've already done. Although you've done a valuation, which is healthy because you can evaluate the two and see what the figures are. The
Yeah.
second thing I recommend to folks is, do you have folks in your industry, in your agency, or say a CPA or someone else that you could set as trustees over the ESOP? So you have to assign those folks as fiduciaries who oversee the ESOP as a financial vehicle and make sure it doesn't go insolvent. So these are your folks who know where all your bodies are buried,
Yeah.
metaphorically speaking. They're the folks who you're saying, if I couldn't be with the agency for the next 10 years, could you keep it going? Could you
Yeah.
make sure that it stays solvent? So an ESOP enables privately held companies to sell equity after an independent valuation.
Okay.
So you get a loan from a lender. The loan is then transferred to an ESOP, and the ESOP, the owner's being paid, but the ESOP then starts disseminating shares over time to the employees based on their annual payroll. So the way ESOPs work is all employees are included.
Okay.
I had a producer who asked me, how would I know that if I came and worked for you, that I would get shares of the ESOP? Is there a way for you to exclude me? And I said, not unless we want to flagrantly disobey the federal government and go to jail. So we don't have any control over that. We have a private third party that breaks up the shares every year. We have to wait 6 months for them to do all kinds of calculations. And then we have an exciting company party where they hand out letters with how much your stock's gone up that year.
Hmm. So everybody, and I missed, and a couple questions. One, is that an accurate figure of what a valuation costs through the government? You say 50 to 100,000?
So you would go through, so the numbers are high.
Yeah.
So I threw out 50 as kind of a low number,
Mm.
but the numbers can be expensive. The government doesn't do the valuation, but they do have organizations that would have the approval to do a fair market valuation.
Okay. Okay. And then if you can kind of rehash that about the employee, how that works for them, um, in as far as accumulating shares.
Sure.
Is there like is there a deduction on their payroll of some sort, or how does that work? Because one of the questions I have, and maybe others have this as well, am I just giving away this equity? I would think that if someone is going to gain equity into a business, there would be some sort of buy-in, perhaps. Is that
Good
incorrect?
question. Good
Yeah.
question. So so there's two ways to do it. Let's start with like currently what we have, and then what would happen if an owner of a company wanted to consider starting from scratch. So every year I do nothing for my stock. At the end of the year, it calculates how much I made, and then it breaks off a portion of the shares that are available, and I get a few more shares. And then as our company grows, the value of my shares increases. So we will send out an email saying, hey, our shares went up by 13%. But the real question is, did your shares go up? But also, did you get additional shares? Now, how shares become available, at least at our agency, it's already been going for a few years, is as folks retire, their shares go back into the pool, which increases the amount of shares available.
Okay.
Regarding do people pay for their shares? They don't. So a company will, let's take an insurance agency. The insurance agency would say, we want to sell 50% of the company to an ESOP. Okay.
Okay.
So they get a loan, and they say, let's say the agency at 50% is worth $2 million. I'm just making that up.
Yes.
A lender will lend the money to the ESOP. Okay. They will pay the owner, but then the shares of the
Okay.
ESOP are disseminated out to the
Okay.
employees over time. So the employees don't get that 2 million day one. They will be given out over a period of time, let's say 5 years. And then as employees retire or new employees come on, those shares start cycling through.
Yes. So then the agency then is paying the loan.
The agency pays the loan. The owner would be paid through the investment vehicle.
Right. Okay. Okay. That's starting to make a little more sense. So let's talk about some of the benefit.
Okay.
You've already touched on it, and what does that, look like? Let's list out some of the advantages of the ESOP plan.
Okay. So I would love to talk about that real quickly, if I
Yeah.
may. I
Yeah.
would recommend any person who wants to just have a scratch the surface understanding of ESOPs. Um, I learned just by watching, there's a lot of information on the internet and a lot of it conflicts.
Yeah.
To get a general idea, just YouTube CSG Partners ESOP. I don't know them. I don't know if they're reputable. They could be wonderful. I don't know. But I do like the way they lay out in simple 1 and 2 minute videos the structure of how an ESOP works. It's not super in detail, but that's by design because every situation's different. But I like what they've done to make it accessible.
Yeah. Yeah. And actually, sorry, I asked you a question, but something else came to mind before we kind of move forward there, and you touched on it. The shares become available, say, when someone retires or leaves the business. How does that work then with their shares? When someone retires, is there still based on, say, a valuation that was done 5 years prior, or how is their payout determined?
So every single year, the ESOP is reevaluated
Okay.
by an auditor who the company pays for
Okay.
every year. Every year, no company is worth the same exact amount every single year. It's gonna change a little bit. Take our agency. We have new people who are coming on board, and we tell them if you start January 1st of say 2025, you will start accumulating shares starting January 1st of 26. So it takes 12 months.
Okay.
After that time, it's like a 401k. You vest 20% into your shares for 5 years until it's at 100%. So at the end of that year six, you have 100% vesting in the shares that you've built up over that time. By the same token, let's say we have the tenured office manager who's retiring or producer who's retiring. They say, I'm retiring January 1st of 25 or 24, whatever the year is. After they get paid after the next year, and they're paid 20% over 5 years. So
Okay.
the new person's getting 20%. The person who's retiring is putting 20% back into the pool. It never works out that cleanly, but every year they do a valuation of the shares to determine how much they're worth, and shares are given to new employees or current employees, and retirees are putting their shares back into the pot of money.
Yeah. So the CPA that's handling, or whatever firm is handling all of these calculations, rough idea, and I'm sure it varies. What's a cost for just the keeping up with this plan?
Right.
Thinking of my 401k, sometimes I look at what um the tax person that we pay for the 401k is. It's a lot.
Right.
It's a couple
Right.
$1,000s a year, just to keep the plan going. What does the cost look like, for an ESOP plan?
Good question. I actually don't know how much we
Okay.
pay our accountant every year.
Yeah. Yeah. I bet it's a decent amount. I think it sounds like it sounds very complex, but maybe it's just
Yeah.
because it's just being introduced.
Well, I think you're right in that most ESOPs end up not using, well, you can do your taxes through a local organization, but the ESOP valuation tends to go through a specialist
Yeah.
that knows how ESOP valuations work. So there is that additional cost every year.
Yeah. Yeah.
However, we can factor this into it. We don't pay any federal income taxes.
Mm.
So there's all these gives and takes that come along with it. If you go online and just look at the benefits of an ESOP, all sorts of tax benefits are presented. It becomes challenging for me to try to untangle how much benefit there is. But I know I mean, what other vehicle do we get that
Yeah.
grows tax free,
Mm.
building equity into a business long term?
Yeah. Yeah. Okay, so let's go back to my question I asked a
Okay.
few minutes ago, but let's touch on, because there's so many. Let's touch on some of the advantages of the ESOP plan.
Okay. From a internal perspective,
Yeah, I mean, obviously there's the obvious ones that the employee is going to have a vested interest
yeah,
in what they're doing. They're an owner.
right.
And yeah,
So I guess I look at it from a recruiting new
yeah,
agent standpoint and from a retaining current staff
yeah,
standpoint. I'm sure your agency has account managers getting calls from other places saying, "Hey, if you could make this much more, would you consider interviewing for a job?" And the Boise area is connected tangentially to Northern California and Seattle.
mm,
And so we have folks from those areas who can pay big bucks because there are high flying agencies in those areas that need someone with 25 years of experience to come work a giant book. Um, but our account managers have come to us and said, I was offered this much more. They said I could work remote. They said all these things, but I do understand the value of walking away from this ESOP. And I don't want to make that decision. Help me know what to do.
yeah,
And so a lot of times when an employee leaves, they've already made the decision when they're talking to their employer. They're just one foot out the door, right? I think the ESOP allows us to have a conversation and say, you know, you're appreciated. Let's talk about compensation. But please know that you could be walking away from $500,000 or $1 million of earnings over the course of your career through the ESOP. And to take a job in another city that you could lose in a year or two if there's an economic downturn, please be careful before you consider that.
yeah,
So from a staff perspective, it's very strong. We haven't made, we have, we have ended up working with some of the top account managers from other agencies in the area because they realized I kind of hit the peak of the compensation ceiling. But if I could add employee stock to that, that sounds like a really good deal. So I kind of pinch myself. Our staff is wonderful and we're grateful for them. But the ESOP really is sticky because culture only goes so far once enough money gets involved. People can love your culture, but if they have enough money thrown at them, they still have to make a decision that's best for them.
correct. Yeah, right. Maybe you can share, and maybe you'll remember this, maybe you don't. But when we met at our lunch at the innovation, you had a specific example of someone that stayed in your agency, and I want to say that it was something like they were offered $20,000 more to be a producer somewhere else, or whatever it is, whatever their role was, and they were considering, but ultimately they stayed with you because because of the stock option.
Hmm. Yeah, we have a few large agencies that are top 10 in the nation who have moved into Boise. Boise's a hot new place to be. And all of the Utah, Seattle, Northern California agencies are now trying to expand into our area. But they will throw huge numbers at producers.
Hmm.
But the producers will say, wait a second, are you going to be here in 5 years? I mean, this is not the agency I'm referring to, but
Yeah.
Marsh McLennan entered Boise 2 years, 3 years ago by buying Payne West Insurance, and Marsh McLennan could be here for 100 years. However, this is the third time they've come to Boise, and they left the other two times. So third time's a charm potentially. But we've been in Idaho for 80 years or whatever it is. So
Yeah.
there's some continuity building.
Yeah. Yeah, so let's touch on some of the other advantages. There's obviously, which makes sense, the retention piece. Maybe touch on your, how that, maybe you see an impact in your account managers and your servicers. how that impacts them
Yeah.
from
Yeah.
your vantage point.
Yeah. I think if it's hard for, I think a lot of the people that will be tuning into your podcast will be folks who are agency owners, who are
Mhm.
business owners, who are, they're listening to podcasts and reading professional development books. But a lot of our folks are going to work really hard, but they're going to be in a specific role that they'll do for decades and they'll do a really good job. So a business owner has all sorts of risk factors they're willing to take in life: buying businesses, growing businesses, taking loans. Other folks have a lower risk tolerance. So when they can do what they're made to do, but also have employee stock, they're going, I found my dream job.
Yeah.
Why would I leave this job when, after a couple of years, I look and I say, okay, here's $100,000 of shares that I own, and I'm thrilled, or 50,000 even, and I know that it's going to grow. So then what happens is you'll have an account manager who's 60 telling an account manager who's 28, hey, I know your ESOP's not as big as you want it to be because you've been here 3 or 4 years, but you trust me on this, that after a few years of momentum, it'll really grow and you'll see the financial benefit. An example one of our producers tells is this: he had a family member who tragically passed away, but this family member worked for a company that was bought by an ESOP. And this ESOP was exploding in growth. And they went to pick this person up and they said, oh, well, here's your ESOP payment. You've been here for a number of years. And they handed him a check for 400 grand. And they said, wait, what? 400,000 bucks here? So for some people, 400 grand doesn't move the needle. But for other people, it's literally the difference between sending all their kids to college. It's the difference between buying that house. It's literally life-changing money.
Yeah, for sure. Not to mention, I can only imagine that, it's like owning versus renting. And the pride that you're going to have in something that you own versus something, you're just renting. All of a sudden you take a little bit of pride when you walk through that door, or when you see that logo, that you're a part of that. And so I think, I would imagine, your quality of work that you're going to see is going to, it's bound to increase.
Well, and one of the things that I was super impressed by was we reached out to all of our team and said, nothing's too small. We all own part of this company. What are improvements we could make?
Yeah.
And we actually had team members that came up with some really good ideas, just minor things in how we sent out policies that ended saving like thousands of dollars per year. The regard you take for how you treat the office furniture. I mean, just little dumb things that you wouldn't
Yes.
think make a difference, but they do. I mean, how much company swag or food or coffee or whatever you're going to drink? It sounds dumb, but people start owning this small things and then they own
Yes.
the big things.
Yeah. 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 It sounds, I mean, any disadvantages that you see, or maybe complications, difficulties?
So, yes, here's where I think somebody can out-talk an ESOP. Let's pretend that somebody came to Brad Bolt and said, we want you to sell your agency to a private equity backed company. We will give you and your best producer equity in this PE company. You could probably make more money long
Right.
term if you took that equity and the producer took that equity. However, you're then saying, I'm not going to take into account the other people in my office.
Right.
So, yes, producers can make more and owners can make more, but that's where a person has to really assess, what do I want to do in my agency? Here's what I find. Most owners say, I want to take care of my employees. But a
Yeah.
lot of times they'll talk themselves into going, yeah, they'll be fine.
Yeah. 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 And that I was about to bring up that point, as I just heard Carrie Wallace say this on one of her podcasts recently, that same point. Most owners will say that. that they care about their employees, and a lot do, and it affects their price. But this is the way to take care of your employees, or a very very strong way. I mean, it's putting your money where your mouth is, for sure.
We started working with another agency locally, and one of the things we say repeatedly is,
Hmm.
if this gentleman would have decided, he said, I don't care, let me just take the money and run, um, his name locally would be different. Not in a bad way. I mean, he wouldn't be, but there's something to be said about the pride an owner takes in going, yeah, we're employee owned. Because people walk up at restaurants and say, hey, I heard you're employee owned. That's pretty cool.
Yeah.
Some people don't care about that at all, but some people go, you know what? It's pretty neat to me um, having the kids of my employees, once it clicks for them, say, it's pretty cool you're part of this company, mom or dad.
Yeah.
And thank you, Mr. So and so or Mrs. So and so, for making that a possibility.
Yeah, the largest glass company in this state, City Auto Glass, and they're a great company. I've used them for 20 plus years, and they became employee owned within the last 10, maybe
Hmm.
15. And now I used to meet with the owner a number of years ago. He's still an owner, but really not actively involved as much. So, but even his rep that comes in, you can see the pride in her, and I hear her say, I've heard her say a few times, yeah, we're an employee owned company, and there's a pride there. Would she
Right.
have the same pride if she was just collecting a paycheck? I don't think so.
Right.
So I think it is noticeable. This is a very difficult, the disadvantages piece. That's what I was thinking, was that yes, on an open market, very very likely you're going to get a much larger payout, as an owner. I mean, I suppose on your end, and then maybe you probably haven't had many, any experience in the acquisition piece. How large are we talking? If I was able to get, $2 million on the open market, am I looking at perhaps only, if I go through an ESOP plan, getting 1.5? Any idea roughly what that gap, may be? I suppose it really depends, right?
Well, right now, valuations are independent valuations done by a PE company are just through the roof. Now, they were higher 2 years ago than they are today. Um,
Yeah.
but I think if a company was looking at being employee owned in the insurance, if an agency was looking at being employee owned in the insurance industry, they would have the ability to say, "Hey, look, here's what a multiplier looks like. Here's what
Yeah.
the EBITDA payout is," and that can be factored in. I mean, when Hartwell became an ESOP, agencies were selling for like 1.5 times revenue. Well, now it's totally different. So the world that will take place the next 10 years of insurance agencies considering being ESOPs will probably be more profitable than it was in the 90s. So I don't know what the difference would be. It really comes down to, are you okay as an owner with seeing your office become a service center out of state? If you're going, I cannot have that happen, then selling to a lot of these groups that will pay the highest payout is going to be tough. One thing I can say is that, like, take our office, for instance. In the few different times we've done some local acquisitions, our multipliers are very similar to what it would be for a PE company. Um, but we also have, there's synergies involved or whatever. But um, most of the PE companies were publicly traded companies will say, hey, you know what? We want to keep things the same, mostly because they don't want to spend money to change them right away.
Yeah.
Um, but within a few years, it will change dramatically. I mean, Acrisure is going public in the near future. They're going to make changes, right? I mean,
Yeah.
they won't have as many offices. I don't know. No one at Acrisure told me that, but I have to imagine that there will be some consolidation that takes place because that's what publicly traded companies do.
Yeah. What does that look like from, a standard operation? Is there, you know, 3 to 5 people that hold the majority of the shares? And what does, and then, how are those shares, decided upon? And Yeah.
So every year, the valuation done by the independent third-party auditor will decide using annual compensation who gets what shares. So if you have an employee making 70 grand, they will make more shares than an employee making 40 grand. And every year, like the owner, we tell people, like the producer I was recruiting, I said, I have no control over this. Our CFO has no control. It goes to an auditor. The auditor says, this is how many shares are being paid out this year or given back to employees based on the percentage that your compensation was to the total compensation of the company. Here's how many shares you get. Now it is capped at a couple hundred grand. I want to say it's 250, but it's been a while since I've seen the number. So you can't have one employee getting paid 400 grand a year soaking up all the shares.
Yeah.
So they will cap it at a certain amount.
Makes sense.
That way it helps everybody grow.
Yeah. Yeah. So then the you know, new hire, let's just use a receptionist that comes in is making, $40,000, whatever she makes. So then they're just allocated X number of shares, but they don't get to start with that until after year one, or is it January 1st of the following year?
So after 12 months,
Yep.
they start the vesting process.
Okay.
But they don't get shares. So let's pretend someone started January 1 of 24. Okay, that's in 2 weeks. It takes a year until they start vesting in ESOP. So as of January 1, 25, they start vesting. At the end of 25, the start of 26, by that time, at that time when the valuation's done, let's say it's the middle of 26, they will be told, here's how much your shares got you from 2025. So we don't know immediately. It takes months to find out how much the shares were worth.
Okay. Yeah. So let's shift gears a little bit back to the agency. So you're commercially focused. What are some improvements that you would like to see, from the from your producers in 2024 as we gear up for the new year? What direction would you like to see your producers going?
So 2 years ago, I hired a sales coach, personal sales coach, third-party sales coach that I met on LinkedIn.
Okay.
And I just kind of followed this guy and I said, hey, you should, I called him and said, hey, I want to hire you. I've never done something like this before. And I was willing to pay it out of pocket, but the agency said, we'll cover it. So it's a guy named Charles Specht at Permission Network.
Oh yeah. Yeah.
And his whole thing is you've got to ask for the business. And then he has different scripts he's worked out that I think are very effective. But what I took from that was success is a lot closer than I thought it was. I credit Charles for helping me have the follow-up to write a few big accounts that I ended up landing. And I don't think I would have written them without him being in my ear, because I wouldn't have sent that last email. I wouldn't have made that last call. So we've signed all of our producers up for third-party coaching if they want it. And we've asked all of them, have a plan and follow the plan. If you don't have a plan, you'll just be lost. I mean, I've been there numerous times. You end up just kind of floating around. So we are rolling out a CRM. Ironically, at IAOA, I met Insured Mine, and we did our due diligence. We use Epic, and they integrate with Epic. So not for all of our producers, because some of our more legacy producers who are, in that kind of the fall or the winter of their insurance careers, it didn't make sense. But for 15 of our producers, we did roll out and say, hey, we're going to have you use this, and we are going to follow up on it. So now we'll have a lot more information, a lot more numbers to see kind of what our producers are doing. And then from there, be able to follow up and see how we can improve as a team.
Yeah, I want to touch on that professional coaching a little bit. I think that's something that so many of us can benefit from, and we don't take advantage of it. So what are some of the things that you were able to take out of this coaching? And I've heard of I, I mean, Charles Specht has a very good reputation. What did you learn from this program? And I know you've already I know you've already implemented it and seen some benefit. So I want to hear about, what made it all worthwhile.
Yeah. So what I liked about Charles was he had high expectations. At the same time, he also understood like there's just going to be times when you don't have anything additional than to what the competition has, right? Because people who aren't in the
Yeah.
insurance industry don't quite get that. But he had been a producer, so he
Yeah.
would lay out a battle plan of like, hey, have a schedule of things you'll do. Come prepared, follow up via email, all these things that you know how to do, um, that he helped implement. But I did like his directness with approaching prospects. And he talked through, hey, you need to have a huge list of prospects and a smaller list of prospects. If you make the calls, you will get business because you'll get appointments. But most producers talk themselves out of making the calls.
Hmm.
So I think Charles gave me the momentum then to go invest in books like Fanatical Prospecting for our team and say, hey, there's gold in this book.
Hmm.
There's really most of the time, Brad, if you call somebody and they say, oh, call me back next week, they're not saying no. They're just
Yeah.
brushing you off temporarily. But so many producers take it personally, like, oh, they love their agent. They might hate their agent, but you
Yeah.
just called them in the middle of a family lunch or something. So um, I liked his approach. He sits down and says, what are you afraid of? Walk me through what you're doing. And from there, I'll see what you're afraid of. And we need to talk through because it's in my head. I'm saying, I don't know if I can say this certain script terminology. He's like, well, why not? Well, because I think this or that. So we actually learned a lot about our producers just by having them get coached by Charles because it ended up disclosing maybe things they were just afraid of saying.
Yeah. And have you seen some benefit from your producers as well?
Yeah, I think so. One of the things
Hmm.
our agency made a decision to do is that folks like myself who have a management component to my role, along with having a book of business, I can't put all of my efforts towards sales management.
Yeah.
And so we need to bring in third party groups to help us occasionally. So Charles would set up a once a week call and say, Mr. or Mrs. So and so, how are your calls this week? Are you hitting your calls? Um, when I started with him for like 2 months, I had to email him every day and tell him how many calls I was making. So
Yeah.
there's days you don't want to make calls, but you also don't want to email your new sales coach you're paying money to and say, I'm not calling anyone today. He's like, well, then what the heck are you doing? Are you in service now or are you in sales? So make a call. So
Just a
we
little
did
accountability, right? That's sometimes that's all it takes.
we did see benefit from we saw benefit in some of our producers. In other producers, I think it helped us see areas they needed to grow. So it was just revealing across the board, I would say.
Yeah. Yeah. And I think from a third party, I think it's just like anything else. Sometimes the message doesn't change, the voice does, and then it sinks in, or maybe it's just said a little bit different
Totally.
way.
Totally.
And yeah, boy, this Charles is right on. And you're like, well, I've been saying this for years. You're not making it, dude.
it
So
it it reminds me of when I tell my wife, "Hey, I think this is a good idea." And she goes, "I don't know about that." But then another person comes over and says, "Have you considered this idea?" And she says, "Brian, did you hear how good of an idea that was?" I'm like, "I said that already."
it's exactly what it is. Exactly what it is. I love it. Um, so what would you like to see your salespeople, and let's touch on this. What would you like to see Brian improve on in 2024?
Yeah, I'd like to get executive coaching for myself.
Hmm.
I want to be more responsible. I want to be more put together just as a professional. And I know that sounds corny to say, but I just want to improve. And so,
Yeah.
um, what I was actually thinking about doing was trying to hire a personal sales coach and say, I want you to reach out to 20 people that I work with and say, in order for Brian to be leveling up in these areas, what does he need to improve on? And say, be
Hmm.
as honest as you can. So
Yeah.
I want to improve. I want to be really dialed in at work, but then when I come home, be spending time with my kids and connected with them and my
Yeah.
wife. I want to eat better because I eat like garbage all the time. Um, and I want to build more relationships. And so I think building relationships in the industry is really meaningful for me. And I want
Yeah.
to continue down that path.
Yeah. Strongly recommend building relationships. And I know I touched on this before. I've been intentional about that for a while. I've gotten better just from conversations, just from,
Mm,
the reassurance, and just from picking up little tidbits, even when you're just not expecting it. The most random conversation that makes sense. Sometimes it's just a book that you hear that you dig into.
hmm
So couldn't recommend that anymore. I think that's a great list. And what also struck me is you mentioned executive coach. Something I may look in myself. I preach a lot and have really been intentional about improving leadership.
Hmm.
And I read books and I listen to podcasts about it, and I'm very committed to it and serious about it. But I've never considered an executive coach. And really, the premise of this podcast is just that of us as agents evolving to be better business owners, which that is, being a better executive. That's something I'm going to put on my list. See, I just learned something today that, no, I think that's brilliant. I think that's something that most of us can benefit from. So, hey, Brian, I want to thank you for being with us here today. We touched a lot specifically on the ESOP. I know that our audience is going to get a lot from it. I think that many in the audience might have some questions. What might be the best way for someone to reach out to you if they want to learn more?
Um, I'm more than happy to talk. I'm LinkedIn, via email, via my cell phone. I'd like to think that I'm the Billy Graham, spreading the ESOP gospel, the key evangelist. So I'm ready to talk about it because I see the
Okay.
benefits. All,
Yeah. Yeah. I will share your LinkedIn in the show notes. So again, glad we were able to get this put together. I think it's went very, very well. Thank you very much for your time. Everyone else, thanks for listening to another episode of the Agents to Owners podcast. We'll see you next week.